Hi, everybody. It's amazing to be back at Strategies Bitcoin for Corporations conference. This is the third year in a row for me. It's even more incredible to be on stage in front of a group of business leaders from around the world. And I think the coolest thing is that most of the people in this room believe that Bitcoin is here to stay. That wasn't the case just a few years ago. Business leaders were not embracing Bitcoin, and a lot has changed recently. And today, I'd like to make the case to you, using some insights that we've compiled at River from both public data and proprietary data that we have, that Bitcoin isn't only here to stay, it has a long way to grow. So I like to break down Bitcoin's life into three different phases. The first phase was the Wild West. The second phase, which is the phase that I'll argue that we're in today, is the it's here to stay phase. And then Bitcoin's final phase, I believe, will be as a global reserve asset. In the Wild West days, there were very few trustworthy financial institutions focusing on Bitcoin. There weren't many safe places to buy Bitcoin, to custody Bitcoin. It was a very risky industry with a lot of fraud, but a lot of exciting times as well. And I would argue that we transition from the Wild West phase into the it's here to stay phase around the same time that Michael Saylor entered the chat. Michael was a bridge between the early ideals of Bitcoin and the builders to the mainstream institutional capital. And I deeply believe that we are now in the here to stay phase. And let's look at why. So if we look at Bitcoin ownership globally, we've seen drastic growth in the amount of people and individuals who own Bitcoin. Over 4% of the world owns Bitcoin today. And if we zoom into the United States, over 10% of Americans own Bitcoin. That's an incredibly powerful political bloc and group of economic actors. And if we look at the global map, the Americas are leading the way as it relates to Bitcoin adoption. Looks like the map was a little messy. So what does that 10% mean? Is that a lot? Well, more Americans now own Bitcoin than own gold. Almost 50 million Americans today own Bitcoin. Americans have been stacking gold since 1776. They've only been stacking Bitcoin for 16 years. That's pretty incredible growth. If we look at public company holdings of Bitcoin, the number of public companies holding Bitcoin has doubled in the last year. Public companies are institutions in the United States that have been blessed by the highest powers to offer investment-grade assets to the public. And the fact that we've seen a doubling in just 1 year of companies like this owning Bitcoin is pretty incredible. And the most powerful financial institutions are also doubling down on this asset. The amount of hedge funds and RIAs making massive allocations to Bitcoin, especially since the advent of the Bitcoin ETF from just over a year ago, is accelerating. And more importantly, countries are becoming more supportive of Bitcoin. Politics is just how humans socially coordinate to create rules. And so when governments get more friendly towards something, it's an indication that the will of the people is in support of this thing. There's an implication of permanence here. 47 countries since 2020 have become increasingly friendly towards Bitcoin from a regulatory perspective, with just a small handful of countries moving the other direction, and those are the usual suspects: China, Venezuela. So where do we go from here? What's next for Bitcoin? What does Bitcoin adoption look like going forward? And to understand that, I think it's important to look at the historical narratives and role that Bitcoin has played in society. In the early days, in 2010, Bitcoin was seen as an experiment. The vast majority of people using Bitcoin or working on Bitcoin at that time, they didn't have any deep belief that this would become some global store of value, that this would become a very important asset in the world. There were a few deep believers, but by and large, most people thought this was just an experiment. In fact, there were Bitcoin faucets back then. You could go to a website fill out a CAPTCHA and just get free Bitcoin. It was pretty cool. By 2013, a lot had changed. Markets started developing for Bitcoin, pretty liquid markets. But there were a lot of ups and downs. Bitcoin hit $1,000 by the end of 2013. But at the same time, the largest Bitcoin exchange in the world, Mt. Gox, based in Tokyo, collapsed and took a lot of people's money with it. So it became pretty clear. This thing is pretty interesting, but there's a lot of risks that come with this asset. And it started being seen by people as something that I should probably pay attention to, but I don't know where it's going to go. But if it does go somewhere, I want to have some. This is where it started entering its speculative investment phase. By 2017, all of Silicon Valley had crypto fever. The narrative then was actually that Bitcoin wasn't here to stay. Bitcoin was AOL, and all of these new tokens that the Silicon Valley VCs had funded would be the next Bitcoin. During this era, we saw the Binances and the Coinbases of the world really grow. But Silicon Valley was wrong. Bitcoin wasn't AOL. During the crypto proliferation, Bitcoin just got stronger and came out the other side still the king. And it became very clear that the main narrative here is about Bitcoin. So by 2020, most people who knew about Bitcoin knew that Bitcoin was pretty important. This thing was real. It was worth paying attention to. But the powers that be, the politicians, the regulators, they still did not like Bitcoin. And the prevailing narrative was that, yeah, Bitcoin is interesting. It actually, it is pretty neat, but there's no way the government will ever let this thing grow. In fact, even President Trump at the time in 2019 tweeted, he doesn't like Bitcoin. So let's fast forward. 5 years later, everything changed. And in 2025, we have President Trump buying a hamburger with Bitcoin at PubKey in New York. And Bitcoin is one of the primary platforms, one of the primary pillars of his presidential platform. So we've come a long way. So what comes next? Bitcoin's narrative and its role over time went from an experiment to an investment, a speculative investment, which I would argue it's been for most of its life, is this speculative investment that's worth at least just having some just in case. And I'd like to argue that the next phase for Bitcoin's, for the way Bitcoin's role in society and the narrative around Bitcoin is Bitcoin as a default savings asset, Bitcoin as a store of value. Bitcoin is something distinct from risk-on textile investments. So what evidence do we have for this? If we look at some of the largest macroeconomic events in the last 5 years, some of the most disruptive macroeconomic events, we see that throughout the vast majority of these events, owning Bitcoin was superior to owning gold or the S&P 500. Most recently, during Trump's Liberation Day, we saw the exact same thing. And the more this happens, the more it's going to happen. The more Bitcoin behaves like a safe haven store of value, the more it will be seen as a safe haven store of value. And we can look at individual adoption. Using some on-chain analytics, we can see that Bitcoin is increasingly held for longer on the Bitcoin blockchain. Now, on-chain analytics aren't perfect, but they directionally indicate that Bitcoin is trading hands less and less often. It is more commonly being accumulated and held for longer periods of time. In fact, over 42% of clients at River who have ever bought Bitcoin have never sold it. And the most important data point, I think, and what this conference is all about, is the business adoption of Bitcoin as a treasury asset. And to me, the trend here is undeniable, and it is the strongest indicator that Bitcoin is becoming seen as a distinct asset, as a store of value. Businesses are stacking Bitcoin at an unprecedented rate. Here's a chart showing the estimated business Bitcoin treasuries using both known public company data and disclosed private company treasury data. So that means that this chart is an absolute lower bound. It's almost certainly higher than this chart. And we've seen tremendous growth in the last year. Now, it's important to hammer this point home. These companies are thinking about preserving their treasury. They're not running hedge funds. They want to preserve their capital through time to further the interests of the business and their operations. What are these companies not doing? These companies are not opening Charles Schwab accounts and buying Apple shares or Tesla shares. These companies historically have held cash and cash-related assets. And they're skipping stocks. They're not even looking at that for preserving their treasury. They're going straight to Bitcoin. To me, this is the biggest indicator that Bitcoin is becoming an asset totally distinct from being seen as anything like a tech investment. And we have hard evidence at River. We serve over 2,000 businesses today, and that number grew 154% last year alone. And these are real companies, real small and medium-sized businesses from around the United States. Construction companies, real estate companies, biotech companies, plumbing companies, farms, restaurants, everything you can imagine. Highly diversified. All of these business owners and operators are coming to the same conclusion, that they want Bitcoin. Most of these people had never had anything else in their treasury other than cash and cash-related assets. And the first thing they're doing to diversify their treasury out of that is buying Bitcoin. They're not buying stocks. They're buying Bitcoin. We're also seeing the most conservative financial institutions in the world continuing to grow their Bitcoin allocations. Insurance companies, pension funds, university endowments. The narrative is changing quickly. And lastly, nation states continue to build Bitcoin reserves. You have the leaders like El Salvador continually buying Bitcoin. You have state-sponsored mining operations in Bhutan and other countries. I think we'll probably see the announcement of a few other nation states over the coming years buying Bitcoin or running Bitcoin mining operations. And we have the Bitcoin Strategic Reserve in the United States. We'll see what actually comes to fruition there. But the fact that this is even a point of conversation. The United States is not discussing a strategic Tesla share reserve or a strategic Apple share reserve. Strategic reserves are for assets seen by the people of a country and by the government of that country as critical for having a reserve for various scenarios. And the fact that Bitcoin is in that conversation at all, to me, is proof that Bitcoin is becoming seen as something completely distinct from a risk-on tech-type investment to being seen as a true store of value and place to save. So what does this tangibly mean? What are the activities and behaviors we're going to see from people because of this shift? Well, for one, I think that Bitcoin savings will become mainstream for individuals. Said another way, Bitcoin is going to kill the savings account. Today, the people who save in Bitcoin are seen as a little bit wacky. It's maybe becoming a little bit normal over the last year or two. But years from now, saving in Bitcoin will just be seen as the default. People won't even think about it. That will just be what they do. A large percentage of their paycheck every month, every 2 weeks, will be going to Bitcoin. Bitcoin as a treasury asset for businesses will be mainstream. Today, the entrepreneurs who are buying Bitcoin for their treasury are leaders. They're pioneers. They're doing something different. It's just going to be normal in 5 years. It won't even be special. So my worst case analysis is that Bitcoin becomes a reliable tool for saving, which is massive. This means that every business and every human on the planet saves in Bitcoin. But it could be even bigger. Bitcoin could emerge from this, the next phase after this, as a true global reserve asset. Now, I don't have time to go into this today. Perhaps this will be a talk for next year. But I think this is the true end state for Bitcoin, and I think the trajectory is clear. So just to reiterate, Over the coming years, I expect businesses and individuals to continually save in Bitcoin. Yet they'll still use dollars for transacting. You'll still get paid in dollars, but you'll save in Bitcoin, and you'll pay your bills in dollars. Businesses will continue to stack Bitcoin for their treasury. This will lead to drastic pressure on the upward price of Bitcoin, and it will become a very mainstream part of our financial lives. Thank you, and I look forward to seeing you all again next year.